So, okay, Richard, thank you, buddy. So S&Ps have been really respecting FID levels, right? We had the falling wedge, which we talked about on face that we could get a bear market rally out of this, pointed out this divergence down here. And then once this 2400 level was taken out with the green line and confluence with the wedge, it kept respecting it, right? And then we had a rally to 38% that turned the market back. But look what it held on the pullback. Held the 23.6 again. Maybe a wick, a little bit underneath it, but basically never closed underneath it. Then we continued on to 38% almost, and then pulled back. And look at how it respected the 38% after it achieved it, right? And I think we missed 50% retrace by about 8 handles. Okay, so at any time this rally can abort. Um, I was thinking that we actually had a chance for over the 28 handle. We'll see, but you could probe shorts and get out of the way if it takes out the fib. But to really know that perhaps we're headed down to lower levels, and now you're hearing a lot of analysts saying there will be no retest. There will be no retest. And with people saying that, and then Google search after the quickest crash in history, um, people want to know how to buy stocks. So they may learn what a bear market rally looks like here over the coming months. I am looking for this to terminate sometime during this month. I think that we could still even give the 61.8 a shot. I know people are looking for new highs. So actually, it's a contrarian position to now be bearish the stock market. So where could we go to? Sometimes when you have these wedge lines, you can retrace all the way to them. And let me just extend this wedge line out. And coincidentally, it's going to come in right around this 1800, maybe a little bit underneath it. So this would support bear case, but maybe even a completion here. I know people are looking for at least, 2060, a lot of good Elliottians. But what's interesting about this 1800 level is when you look at the weekly, that's pretty much where this megaphone line comes in around 1900. So I still think this megaphone line, which was not tested to the downside, still could be tested maybe into May. Maybe into May. So we'll see. I think an important part of the continuation move, uh, correction back up here in the market is going to be predicated on the dollar not breaking out to the upside, and Dixie getting back over 101 would do it. Uh, I'm looking at Euro Pound again. We made a new low. Basically not a new low, but we took out the previous low. So I'm stalking it now. This is not ideal RSI wise. I'd rather see these two readings above 30. And if the dollar does strengthen one more time, I'm going to look to buy the euro. It'll probably be next week if it doesn't break out over 109 and there's one more trip down towards 107.48 at the 78.6. Well, Chris, I look at the S&P because it's probably the most followed broad index on the board. But you're right to look at things like Nasdaq and the Russell. I mean, it's like when you talk about the dollar, you could look at multiple instruments, and at times they have their own. They may all kind of go together in the general direction, but then there are things that lead and things that lag, and it's important to know where the leadership is, so what the strong instruments are to buy on dips and know what the weakness is, so that if there's a rally, that's your shorting candidate. So very good question. What about going to 3,000 without new lows? Actually, I think there's a camp of people, FX trader, looking for that. So that seemed extreme a few weeks ago. When we were talking about a bear market rally, at least a rally coming, you could label it whatever you want. But there are certainly more people talking about it this week than 2 weeks ago. You think it's the most probable outcome? Okay. Well, that's what makes markets. So here's what I think. You're spending too much time thinking about what could happen in the future. Let me coach you. Do the right thing today in the markets, and tomorrow will take care of itself. And with that being said, I want to hand it over to another veteran, hand it over to Blake. Good morning, Hammett. Blake, how you doing this morning? Family good? Ziggy stole what I said in face yesterday after you left. May the algos of death pass over your account. Huh? He steals all my lines, Blake.
That's funny.
Have a talk with him, all right?
That's funny. Yeah, just so you guys know, Ziggy he's been I've known Ziggy for, I want to say, probably at least 10 years. I would say at least 10 years. And I had the pleasure of meeting him in Phoenix. He had retired in Las Vegas, or retired from his occupation, and he moved to New York, spend time with his family and his grandbabies, and he wanted to go out there anyway. So on his way to New York, driving across the country, he stopped in Arizona. We had lunch, and he's just probably one of the most wonderful, nicest human beings you ever meet. And so he's a funny character. He really is. He is. Always good to see him around. And he doesn't come in the chat room as much as he used to, because he's spending a lot of time with his grandkids. But he's he listens in, and I think he listens into the webinars, and chums in the chat room from time to time. And it's really, it's just really pleasurable
Yeah,
person.
he listens in to steal my one-liners to use on Twitter.
Right, that's it. I mean, damn thief. Anyway,
it's a compliment.
So let's talk a little bit about I actually have a couple things to talk about. First of all, we have Canadian employment data, and I want to talk about the Canadian for a second while we're here. If you guys haven't seen, the crude's been all over the map. We are once again failing around that 2750 level, and if you don't understand why this is so important, you see this black line here. That is just a really important previous support. Yeah, we've been above it a couple of different times, but the fact of the matter is crude is staying relatively weak. Even with this whole rally back in equities, you would have thought crude would have strengthened. And one of the things that's going to really strengthen crude, and I think you can pay attention to all the production cuts and yada yada yada, but I think what's really going to open up crude to the upside is that once the economies globally are back up and running, and until we see a definitive path of opening the global economy, not just the US economy, but the global economy, you're going to see crude start to strengthen. Now, I think crude is a decent proposition down at these levels? Probably, because of all the production cuts that are being made. And eventually we are going to all go back to work. So, and I use that term loosely. And, some of us just don't drive anywhere for work, but I'm just talking, as a global economy. So I do think that crude oil is probably, somewhere around the $20 level, somewhere between 20 and 30 is probably a good place to own it. I think if you probably bought crude somewhere around here and you closed your eyes for 6 months and you opened them up, and you'd probably be happy that you did. Might be trading at 34, $40, who knows. But that's not how we trade crude. And I'm just trying to think more strategically. Probably crude's a better buy on dips. Now, the reason why I talk about all this is because I look at the Canadian and I'm like, well, why, with crude off the lows and with equities off the lows, why isn't the dollar Canadian trading here? It's been just a question that's been on my mind for like days. And I'm not shorting the dollar Canadian, but I keep thinking, wow, this dollar Canadian's got to go down. That's what I keep thinking to myself. It's like, why aren't we 200 pips lower? We do have Canadian data today, employment data. Now, excuse me. I stayed up and I stayed up late last night. Late for me, which was like 9:30. Which when you get up at 3 is only a few hours of sleep. Anyway, I watched the Mr. Rogers movie. Just so you guys know, the Will You Be My Neighbor? I think it is the one with Tom Hanks. Great movie. Just it's a great family movie. And if you are a person like me that grew up with Mr. Rogers, you would really find it interesting. It's a good movie. Anyway, and by the way, I'm going to spoil this for you. Mr. Rogers' real wife makes a cameo in the movie. It's hard to. You have to be really, really keen-eyed to spot her. Just so you know. Anyway, if you look at the Canadian employment data, forecasts of negative 350,000 jobs. Okay, here's Bloomberg. That's a data flash, by the way, just so you know. That comes with Forex Analytics. If you guys don't know where it's at, it's under calendar. You open the data flash and it comes out. Bloomberg has a starkly different number of negative 500,000 jobs. So just keep that in mind. That there's a lot of different economists that are looking at different data. So that's going to be a hell of a mover. And then on top of that, the weekly. Oh wait, I think I was just referencing. No, that's for Canada. Our jobless claims, we're expecting 500,000.
5 million.
Huh?
5.5.
5.5 million. Sorry.
Yeah.
And that is supposed to be a lot lower than last week's read. And I mean, that makes sense because people are talking about the virus plateauing, and then people are talking about not only the virus plateauing, but also, the jobless claims as well. So, data we'll have to watch just to make sure that, the stock market recovery that we're seeing is sustainable. Now, the reason why I bring this all up, because Canada, it has not been, this dollar Canadian has not sold off. It has held up very, very well. And what I'm really watching for is, if we move back above this 141 level or this resistance, and this is another bear flag, bull flag. If you don't recall, way down here, I say way down here because I'm going to have to remove all this. If you don't recall all my blog posts every day, I'm like, false breakdown, it's going to lead to a breakout. We have a pennant, I think I talked about this every single day for probably a good month. False breakdown, end of last year, bull flag, false breakdown leads to a breakout. Go read all the blog posts of all my charts of the day. I probably made it my chart of the day at least twice, maybe 3 times in that time frame. And then, then the unthinkable happens, right? Well, now, if you look at the dollar Canadian, this is still very bullish, and it's still a pennant. And if you look at like where we've been here, this is a weekly chart, and you go, can we even go higher than where we're currently at? The answer to that question, in my opinion, is yes, we can. Look at the long-term charts of the dollar Canadian, do you see this as being uncharted territory where we're currently at? No. Matter of fact, if you really want to, get crazy about this, this is, hold on, let me grab my pen, annotate. I'll just do it this way. I'll just use a spotlight. Here we go. Okay. So you guys see what I'm doing here. This in essence is a big cup and handle pattern, right? Big cup and handle pattern. So, a breakout above this 146 level would be extremely bullish. Now, if you're in the camp that we're not past this, we're not even close to being past this, and we are going to see the new lows in the S&P and maybe even lower. If you're in that camp, and I'm not telling you what camp to be in, I'm just telling you if you're in that camp, then you've got to keep an eye on the dollar Canadian, because the dollar Canadian is one of those currency pairs, or the Canadian currency is one of those currencies that will move lower with lower stocks. And also the dollar should strengthen as a result. So the risk of a move higher in the dollar Canadian is very high if you think that the S&P is heading back down to 2,200 or 2,000 or whatever number you have in your mind. Now, if you're in the other camp and you're thinking, well, the S&P is going back to 3,000, and I think we have all the ingredients for that, then you should be a dollar Canadian bear. Okay. So, and I'm not going to tell you what the right answer is, because I don't know what the right answer is. And I think the dollar Canadian will tell us what the right answer is, right? It's right. It's seen right here, a break above here or a break below here. So you can figure it out once the market moves. But I think today is going to be important, because we're looking at, Canadian employment data and then U.S. employment data. So if we see the weekly jobless claims improve a little bit, let's say we don't, it comes in below 5 million, let's just say, all right, and let's say the Canadian data is worse than expected, and Canada loses like 600,000 jobs, or maybe even 800,000, or some crazy number, that could be the catalyst that drives the dollar Canadian higher, and it may not be the equity market, so to speak. But if you're watching equities, I think the longer term trends in the dollar Canadian are going to be more driven by what happens in the equity markets. Okay. So just keep an eye on the dollar Canadian, because I think it's a great setup. It's a setup for a possible, breakout here, because it hasn't been going down. Like I said, I'm sitting there asking myself for the last week, why isn't the dollar Canadian trading at 138? Why? And I'm not shorting it, because I was waiting for it to show its colors price action wise. But I've been asking myself that question like every day. And I have to imagine there are traders that are short the dollar Canadian that are like, I don't understand why this thing isn't 300 pips lower. I've been shorting the hell out of it. Crude's bounced, stocks keep bouncing. What's going on here? So anyway, you might get some traders stuck short here. All right. Another thing I wanted to talk about really quick is the cable. So, the pound, we've had a nice bullish recovery off these lows, and you can see how we're just kind of, we've got this bull flag developing. It's been a very shallow retracement in the cable. Boris Johnson, so it seems, and I'm not in the UK, and I don't get, though I have to just, regurgitate what I read. And matter of fact, I haven't read anything new today, but I wasn't looking for it either. The pound is holding up really well. And I think one of the things that will help the pound perform well is if Boris Johnson comes out of, intensive care and comes back and says, I beat this thing. That's going to be great. I talked about it yesterday. I think I did here. I'm pretty sure that I did, or either I talked about it on the daily roundup webinar. One of the things that would be very devastating to people in general, sentiment wise, is if a head of state passes away from the coronavirus. I know you can say, well, Blake, the coronavirus has no, it has no prejudice. It doesn't care if you're a head of state. It doesn't care if you're a 15-year-old kid or a 60-year-old female. It doesn't care. I understand that. But if a head of state dies as a result of the coronavirus, that's going to weigh on sentiment, because the problem is that people will go, well, wow, even the best medical care couldn't keep alive one of the most important people, quote unquote, in the world, as a head of state. That would weigh on sentiment, in my opinion, not just on the cable, but it would weigh on just overall sentiment in general. And we're all trying to get past this thing. We're all trying to say, mentally, we can beat it. I think this is a really big effort globally amongst all human beings. All right.
No one is safe, not even a king, and it will be the excuse for everything.
You and your rhymes, Dale, I tell you. Okay.
It's my poem.
Hold on really quick, but let me, before I forget this thought, the one thing about the pound, though, this is the one thing that I am a little concerned with. You see these highs here?
Yeah.
The highs right here are just shy of the 618. What can happen, and what can happen quite frequently, and you guys have been there, you see a break in the highs, we come up and challenge the 618, everybody gets uber bullish, and then we fail. And this is what I'm mostly concerned about. Anybody who gets really bullish here goes, ooh, I'm long, and then it fails and rolls right back over. Because when you have a key technical level that's so close to where a resistance or support is, sometimes you'll come up and challenge those areas and then reverse. And so I think you've got to be a little careful with the cable here. It looks bullish. It's got all the markings, the characteristics of something that really wants to go higher, because shallow pullback, bull flag pattern. We got the story, Boris Johnson, he looks like he's going to come out of this thing, and it's got all the genetic makeup of being a bull move higher. Dollar will weaken as equity markets strengthen, all that. But I get really concerned with this fib level. That's why I'm really, just watching that fib. And then, not to mention, you see the euro sterling, the euro pound. I mean, we're still holding the 200-day moving average, and despite this little break below the 200-day moving average, we're really just still holding all the support. So, you got to be, a little careful with the cable at these prices. Don't get overly bullish, even if you're like, wow, we broke new highs. I'm getting long the cable, and I'm just I'm gonna sock that sucker away. You got to be careful. Okay. We are coming into the data very shortly, and I wanted to bring in my colleague Steven Stelios, but I want to first of all congratulate all of you that have won our.
Yeah, congratulations.
Yeah, well, we've done 3 years of these FACE webinars, and for those of you that didn't know me before then, I've been hosting some sort of broadcast in some way, shape, or form since 2003.
It's a lot of talking, Blake.
We've both done our fair share of talking. I used to do the Morning Edge webinar for like I said, since like 2000, maybe 2002. Actually, I have to go. Anyway. But
do you remember my radio broadcast from 1931?
I actually did a radio broadcast. We started off with a radio broadcast, but that's another story for another. But I just want to say congratulations for all of you guys that won, because we celebrated, as Steve and Stelios and Dale did this week, and we did random drawing. We have 9. I thought it was only going to be 3, and then Steve's like, "No, we're doing 3 for 3 days," and I'm like,
"No, 3 per day
every
for
day.
The whole week."
Yeah. Oh wait, we're doing it today too?
Yeah, we're doing it today too.
Well,
I know it's coming out of my paycheck. I know.
Yeah, I mean, I thought we were only doing 3 winners, so we're doing another 3 today. So there's 12 winners.
No, 15. It's gonna be.
What?
Wait,
right?
Tomorrow's Good Friday, Steve.
So we're
Yeah.
not going to have a show.
Huh?
No,
No,
there's
we
no
don't.
markets either.
It's the market's closed.
Okay, 12 then.
Or should we
Well,
just do
today's the
another 3
last
on
day.
Monday?
Okay, let's do 3 on Monday as well then. Yeah.
Okay,
Oh,
you can
so
take
we're,
that
we're
one
not
out of my paycheck.
broadcasting
How about
tomorrow?
that?
We're not
Okay, I'll take
broadcasting.
that out of your pitch.
All right. Cool.
So no, but guys, it for all of you guys that are winning, that's awesome. You get a free 30 days of Forex Analytics. So let me just make this recommendation, then I'm going to go. When you go to forexanalytics.com, okay, and you log in, go right here where it says chat room. All right, and the chat room looks like this. You'll be in chat. We try to steer people away from talking politics, no religious talk. There's nothing being sold in here. It's just talking about the markets, and we have charts that we're posting, and and sometimes pictures of things, but all markets. And obviously today's actually been pretty quiet because the market hasn't just moved a whole lot today. You can see where I started talking earlier this morning is way back here, and there's still been a lot of
And install our tablet and phone apps.
Yeah. So I wanted to go there too. So yeah, there's our chat room. Okay, make sure you do that. Make sure you go to your settings. Oh, okay. So go to the mobile app. Download the mobile app, the App Store, Google Play Store. So this way you get everything on because it's a 24-hour market. So when like support or resistance levels are breached, or we have a new update, you'll get that. And then make sure you go to your settings, because you can adjust, because you'll start getting a lot of notifications. And if you want to exclude some, you can do that because it's completely customizable. And it's a lot of stuff for the price. I mean, I don't know anybody else that even has a mobile app. So I mean, I'm sure there's some out there that do analysis that have them. I'm just saying I don't follow it, and to me it's irrelevant. You guys get a lot of stuff for what you pay. So for those of you that won, make sure you do that for at least the next 30 days while you're using us. So anyway, I want to thank everybody for being part of these 3 years, and let's look forward to another 3 years. And I'm going to pass it off to Steve and Stelios and Dale. So thanks, guys. And we will not be broadcasting tomorrow because it is Good Friday here in the United States. And your updates tomorrow, for those of you that get updates, they'll be limited. I'll pop in front of my computer and just make sure nothing crazy has happened. If there's things that are happening, then I'll obviously post some charts, but you're not going to be getting your normal plethora of updates throughout the course of the day on a holiday. So all right, guys, have a great one, and thanks everybody.
If the markets are volatile, we are a big team. We're going to be sending updates anyhow. But if the markets are quiet due to the holidays, they're going to be less. Thank you, Blake.
Thanks, guys.
Have a good weekend, Blake.
You do the same. Have a wonderful weekend and stay safe, everyone.
Thank you. I like it when he uses Greek words. He said plethora. I like that.
Plethora, yes. Plethora.
So, how are you guys doing? Everybody okay?
Yeah, good stuff.
Good stuff.
So
we have numbers in 1 minute. So let's have a look at that first. And then
let's hope the trend doesn't continue, because if you remember 2 weeks ago, the estimation was for 1 million jobless claims, and we got 3.4.
Yes.
The previous week, the estimation was for 3.5, I think.
Yes, and we got 6.6.
Yeah. And in this case, it's for 5.25. So let's hope we don't get, an analogical higher number than the previous ones. Even if we get the estimated 5.2, that's going to make it more than 15 million jobs lost in the span of 3 weeks, which is
wow,
crazy. Yeah,
crazy indeed. Yeah,
it's like an economic nuke.
Yes,
yeah,
we have Canadian employment numbers as well, so probably worth watching.
Keep in mind that if I'm right, Canadian population is like 1/11th. So you can put. I mean, I'm saying that so you can put that in context.
6.6 again.
6.6.
Canadian minus 1 million. Oh my God.
Oh my.
Yeah, so that's like 6 million, right? Yeah, here in the U.S.
No, it's like, I think, if I'm not mistaken, it's like the equivalent, like 11 million jobs lost in the US, if I'm not
Wow.
mistaken.
Wow.
Yeah, this is pretty miserable
Yeah.
data, unfortunately.
So the numbers are horrific.
Continuing claims came in a little bit better than
7.5
expected,
million.
but still,
but
it's,
still, I mean, it's,
yeah.
you know, these are numbers that make 2008 look like a walk in Central Park.
Yeah. Yes, unfortunate numbers. So let's see where this is all going to stop. But as we've said here, day in, day out, I don't think this is going to be a quick V-shaped recovery. I think it's going to be, unfortunately, a bit more protracted and
Fed
painful.
takes new steps to provide up to 2.3 trillion in loans. I mean,
Okay.
trillions are flying around like nobody's business.
Pretty soon
Yes.
they'll be talking about real money, bro.
Yeah. I mean, 2 trillion here, 2 trillion there, 2 trillion.
What's after trillion? Google?
Quadrillion. Yeah.
Quadrillion, but
Quadrillion,
you'd better not tell them, because soon enough we're going to start getting those as well.
Okay.
Yeah.
All
So
right.
speaking about trillions and printing money, you heard what the Bank of England and the government is doing. Did you hear that?
Yeah.
So the government is
Honest.
going to print money. They're not even borrowing it. They haven't
they're
said.
honest.
They haven't said. Yeah, absolutely. They haven't said how
They're
much
honest.
it's going to be, but they're not going to borrow. They're going to use what's called the Weights and Means facility with the Bank of England, where basically the Bank of England just boosts the size of the bank account.
Yeah, I mean, you know something. Brits are at least more honest people. You know what I mean? I've talked about that story years ago when Ben Bernanke was called in Congress to testify about, you know, what the hell they're doing, because quantitative easing looks, smells, and quacks like debt monetization. And, you know, he vividly explained that quantitative easing is in no way debt monetization, because it's going to be very temporary, and they're going to drain the liquidity out of the market immediately after the emergency passes.
Yes, we saw that.
We're now 12 years later. 12 years later, the Fed's balance sheet managed to shrink just a little bit for a few months. And now the estimations have started being like, you know, is it going to be 10, 12 trillion after a year? We don't know what this, you know, what the high is going to be again.
Yes.
Now we're just making estimations about where the Fed's balances is going to be in a year from now. And the estimations are anywhere between 10 and 12 trillion.
Nice.
So
actually, talking about measures being temporary, the UK Treasury actually said today that these measures, this step that they're taking today, will be temporary and short. And wait, and this is what they actually said. This will be temporary and short term, and they assured that any overdraft will be repaid as soon as possible before the end of the year. Maybe you know what, they can actually do it if they borrow the amount, because 10-year UK is 35 basis points. They can easily borrow if it's, you know, people that's talking about something like 500 million. What is it? I can't remember the amount, but anyway, whatever it is, they can borrow it at 35 basis points for 10 years easily, so they could repay it.
You mean they can borrow it at those rates easily because the central bank will continue to monetize the debt?
Yeah, no, that's a small detail.
Yeah, because that's the only way they can borrow, or anybody can borrow in that ridiculous yields that we find out in the market. Because if they let the market find its proper risk premiums, who would actually be willing to lend all those trillions of dollars to over-indebted governments and believe that even if they get their money back, which is, there is a good chance they're going to get their money back, that the value of the money they're going to get back is going to be what it is today, or even in proximity to what it is today, right?
Right. What's happening? The markets, metals are flying.
Yeah, let's see. I was about to say that. I mean, let's see what's happening with the metals, and of course,
everything's flying on, you know.
Yeah. So
helicopter.
Two other things I want to mention before you start with the charts and before we do the draw. OPEC Saudis, they're talking about that they're ready to reduce output by 4 million barrels per day, but this starting from these latest levels after they've increased it. Still, it will depend, whatever agreement OPEC Plus find, it will depend on the baseline scenario, how much they want to cut, for how long, etc. So until that's known, oil is quite volatile. You can see it's going up and down quite a bit. Now, one other thing, excuse me, we have the Europeans and the Eurogroup and the finance ministers trying to agree on something. They're not agreeing, and it kind of makes sense. And in the words of the Austrian finance minister, he basically said that, and I quote, "It's immoral for countries not to stick to the rule in good times and then demand solidarity in the bad times." And it makes sense, of course. So, this debt sharing and
but of course they're going to paint him as being like, the bad guy, the guy that, all the usual. I mean, of course, obviously.
So,
I mean,
so we're waiting. Yeah,
we're Greeks. We could very easily say, "Oh, damn Europeans! They should definitely,
give us some money, dude." Yeah,
give us some money by, in essence, having their balance sheet guarantee our debt. But let's be honest, because it's very easy being subjective in these issues. Okay, let's say you're Portuguese. Let's say you're
Let's
Greek.
talk about politics and religion for a little while.
Yeah, Spanish.
What do you think?
Let's say you're Italian. You're all for it because there is only benefit, right? If you were German, would you actually sign for it?
Well, you see, Germany, Netherlands, Austria, and one other country, I think they're against. So there's a rift, and I don't see how this is going to be agreed upon. At least Eurobonds, it's difficult to get them done.
Yeah, it is.
But obviously, you never know.
It is for all the reasons that make sense, if you ask me, Stelio.
Yeah. Okay, let's do the draw, and then we can move on to some.
Okay,
charts.
and then we go to the charts. Yeah, we'll start by having a look at. By the way, somebody mentioned the USD CAD. I think Blake covered it more than enough. It's still within this channel, so there is nothing to say. I do also think it's going to break out. Same with the pound that Blake showed, so we're going to go through the rest. Anyhow, let's make the draw fast and see who yesterday's winners were, and we take it from there.
Oh, go on. Oh. It's going to be a draw with music.
Yesterday we had, from those that are eligible, I'm not going to mention it again, email addresses that made sense and look legit, blah, 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 blah. And of course we can't know, the names of the people and their emails that were watching through YouTube and Twitter and Facebook and all that. So on Zoom, we have 328 that were eligible yesterday.
Yep. Somebody did ask yesterday if you're eligible if you watch on YouTube. No is the answer, because they don't know who's
we
watching.
Don't have your date. Yeah.
So you have to be on Zoom.
Yeah. So here's the generator: 1 to 328.
Ziggy's funny.
Yeah.
Okay. So click it a couple of times and then
E minor.
189 is the
189.
first.
Okay. 189.
Name. So let's see. 189 is Alan M. Let me go to the other list and note it down.
Nice.
Okay, Alan M.
We need a drum roll, dude.
That's the best I could do.
250.
Nice.
250 is
Ivan G. Ivan the Great.
Ivan G. Let me note it down. Found him. Okay.
Last one.
And one more. 249. Okay, that was yeah.
Fix.
249. Nilesh P.
Okay, send me over the email addresses and the names, and I will get them done.
Perfect. So congratulations to yesterday's winners, actually, which we know today. And
today's winners will get an email.
Monday we're going to draw for today's, and Tuesday for Mondays, since tomorrow we don't have a webinar, and that's going to be it. That's going to conclude our giveaways for celebrating 3 years of FACE. Nice. Good. So, Stelios, anything else before we go to the charts?
Not that I can think of right now. No. So we're good to go.
Good. Okay. So let me go through the questions because we have quite a few. Steve, inverted head and shoulders on gold future target 1950 on 4 hour. Do you agree? Okay, let's have a look at gold and silver anyhow. So I would probably start with those so we can definitely have a look at them. So that is what he's looking at. You can see it here, this, right? Whoop.
Yeah.
So this is what he's looking at. And by the way, let's delete this now. So this is what he's looking at: shoulder, head, shoulder. Listen, many technicians don't kind of accept inverted head and shoulders formations as continuation patterns, in the sense that, you know, their reliability is like, you know, somewhat lower. But anyhow,
I've seen them work. I used to debate people about it too. 'Cause,
I've seen them work as well.
maybe they're really cup and handles, you know, and the terminology is wrong, because you could have a cup and handle after an advance, where a classic head and shoulders bottom happens at a bottom. That's why they call it a bottom, not a head and shoulders that, you know, pressing new highs.
My point here is that irrespective of if you want to look at this as an inverted head and shoulder, there is no question about it. If we break to new highs, which is very likely, that's going to be a bullish event, right?
Yeah.
I mean, there is no question about it. That is going to be a very bullish event. So next upside resistance from 1703 and that high. Keep in mind, by the way, that on a daily closing basis, the high was below 1680. So we're not at all far away from posting a higher high on a daily closing basis. Okay.
Yeah.
Above that, we have the 78.6% fib from the all-time high to the low that followed, which comes at 1733. You know, and then 88.6 at 1821, you know, etc. Obviously, we can also fib extend these latest pullbacks. So let's see the 127.2 and the 161.8. Equivalent upside targets 177, 1,771 and 1,858. So we have, these are the upside targets following 1703, 1733, 1771, 1821, and 1885. 58. So yeah, I mean, what can I say? I've warned you multiple times. Only from a fundamental perspective, trying to fade gold with trillions and trillions and trillions of liquidity flying globally doesn't make much sense to me, because I'm not saying that gold can't at the same time move lower, and we might see that happen when we get another strong leg lower in risk, because we know that a lot of people will be liquidating positions. But all I'm saying is that, you know, you're in big danger with what's happening one day, waking up being short gold and finding gold $100 or $200 higher than you left it. I know that it sounds almost impossible to some of you, but trust me, it can happen. So, you know, you don't want, you know, to be there when it happens in the wrong side of the market. And multiply that for silver, because silver can really fly overnight without even you realizing what happened.
Well, maybe some of these guys are like me and they need to get hit in the head with a ball peen hammer to know it hurts. Right? You know.
Yeah, let's hope so that not. But
yeah, but you know, sometimes that's what it takes to learn, is to live through it, and then the pain will keep you from doing it again.
Hopefully, because I've seen people get through the pain and still not learning. So, you know.
Oh yeah. That's me.
Nah, you're exaggerating. So silver now, after consolidating a little bit, seems that like it wants to break through this confluence of resistances at 15. Next upside confluence of resistance is at 16. So looks like we can make it there. By the way, you know, we have confirmation about what I read about the Fed. The Fed will provide up to 2.3 trillion in loans in a handful of new programs. Main Street facility could support up to 600 billion in loans. Municipal facility to offer up to 500 billion in loans, expands primary and secondary corporate debt facilities and TALF, TALF collateral will include AAA rated outstanding CMBSs and new CLO collateralized loan obligations. So bottom line, to make a long story short, they're bailing out everybody. And when I say everybody, everybody. I mean, I want to remind you, I was joking about that again and again. Theoretically speaking, they were running every few months stress tests demonstrating how sound the banks are, just for you to realize what BS all that is. They now have to bail out every single industry, including the banks, so the banks don't fail. Because if they didn't bail out every single industry, the banks would fail, because every single industry which they hold the loans for would go bankrupt. Okay, just for any of you that might have really believed that stress tests are anything else than charade, they're not. They're just charade. Okay. So 2 more 3 trillion. Nice. Let's have a look at crude. So crude. Crude finding support. If you remember, I said yesterday that don't turn really bearish crude in the short term, I mean, because crude can produce another high before it attempts to move lower. So we did find support yesterday. I wouldn't be surprised to see at least a retest of 30. You can see it up there. You can see it up there. Previous lows there. I could even envision a scenario that we can see crude push to 35 before perhaps moving lower again. So especially with all this money debasement, I would be very, very careful in being short any tangible stuff, any commodity, anything that has, real value and not just paper value. Okay. Effect of coronavirus bonds on equity and FX. Not very sure we're going to see any of those to answer, but let me tell you. Perversely, would be a boost to both equity. Oh no, boosting equities if it happened wouldn't be perverse. I mean, would make sense, but it would also boost FX. So if we did see, or if we do see coronavirus bonds from the side of the European Union, from the Eurozone, actually, you'll probably see Euro getting a good bid, but I don't think we're going to see any of that. And if we do see something like that, I think that the amount will be such that the market is going to be underwhelmed. So I would hold a very small basket in expectation of, something like that. Okay. Crude and natural gas are pairs, as gas is a byproduct. One is going up, the other one is going down. Please explain. Nobody said that the two of them cannot be divergent for periods of time. But keep in mind that, on long-term horizons, they're very much correlated. So, shorter term divergences don't matter that much. And each one of those, they are byproducts, as you said, but each one of those has their own unique characteristics and supply demand. Also, I need to remind you that there are methods to extract gas without tapping into crude that's beneath. So, natural gas has also methods of increasing supply which isn't the same as also extracting oil. So some divergences will always exist. But speaking of natural gas, I would also pay close attention here, because we've broken out from this channel, and not going to be the first or the last time that I'm going to see a breakout, a retest, and a resumption high, and we still haven't fulfilled the double bottoms target, which comes just above $2. So I think that from a risk reward perspective, natural gas doesn't look bad for another leg higher here also. Okay, so keep that in mind. I'm continuing through the questions, see what we haven't covered. Given Boris is okay, what effect will that have on stocks? In my opinion, if Boris is okay, there will be no real effect on stocks. The opposite, though, is a different story. So if something happened to Boris, then there would be a big hit in stocks. But I think the market is still pricing in a very high probability that he's going to be okay. So don't expect to see like a big reaction from stocks when we get confirmation about that. Okay, that's my point. Potential false break lower on euro pound at 61.8. Let's have a look at euro pound because we definitely didn't have a look at it yesterday. Here it is. So euro pound is still holding this confluence of supports. It's not only the 61.8 as you mentioned. This is also a horizontal support resistance area. And if you zoom closer, you can see here this blue moving average. That is the 200 daily moving average. And you can also see this green one that is fast converging to that area. That's the 51. So multiple supports at this 61.8 area. And yes, it does remain an important level of support. So yeah, I wouldn't be surprised at all if the retest holds again and we see a move higher from here. From a risk reward perspective, it definitely looks appealing.
I just want to add, Steve, as the euro came back and the dollar weakened, S&Ps are about to press the highs from last night. So my contention or my narrative that for a continuation move of this rally in S&Ps, you need dollar weakness. So your first sign that S&Ps may be in trouble would be to see the Dixie starting close above 101. And it doesn't look like that's going to happen for a while.
Yeah, I'm still long here, the S&P.
What are you thinking to that green line, 28.95?
I think we can make it, but we first have to go through the hurdle of this confluence of the distances at 27.90. You know, though, what troubles me actually doesn't trouble me because I'm long, but what would trouble me is that a lot of people are paying attention to that, and I see a lot of people waiting for an imminent failure. Now, does this make sense? Answer: absolutely. Does this mean it's going to happen because it makes sense? No, it doesn't. Right? So keep in mind that this squeeze can go on for a little bit longer. Has my thesis changed? Absolutely not. I believe that once this market stops focusing on the potential of coronavirus recovery, it will realize the burned economic ground that the coronavirus trigger will have left behind it. So once the market stops focusing on potential improvement on the coronavirus front, it will have to start focusing on the real damage to the economy.
You know what else it may have to focus on, Steve, that is not at all, and the banks may like it, yield curve steepening, and everyone talking about a 0% rate on the 10-year. They're going to have to wait, and I think we're going to see the 10-year above 2% in the coming week. So what would higher rates do to valuations? Even though we're 20% off the highs or 15% off the highs.
I think a little bit higher rates nobody would bother about because they might even try to pass that as a sign
of recovery.
That the market is actually getting more comfortable. So a short-term rebound in yields, I think, might even temporarily pass as good news.
For the banks, the yield steepening of the curve, I looked at XLF.
Forget the banks. I've been saying that to people since 2000.
No, look at XLF. It has, take a look.
No. Let me tell you what I mean. I've been telling that to people since 2008. I've actually recently, I remember the story that we had an argument with a couple, one of my wife's classmates in her master's degree, and her boyfriend was working in a bank back then. Like we're talking about,
it's so hard to imagine you being in an argument.
Yeah, that very, very true.
A debate.
So this guy was telling me one night that we were eating, I think it was like 2009 or something like that. He was telling me that he was advising people to buy banks because the price had gone down substantially here in Greece. And I told him, like, you must really hate your friends. So he was like, what do you mean? I'm like, banks are going to zero. He's like, that can't happen. I'm like, banks are going to zero, not 0.1, zero, all of them. I was talking about Greek banks, but I'll tell you that what I'm saying now is relevant to all banks. Listen, the banking model is done. It's over and done. The traditional banking model is dead. If they let them face the music, they would all go bankrupt tomorrow. The current economic model, God make it an economic model, I mean, is death trap for banks.
I'm just talking about a trade.
Yeah, okay, yeah, different story. But I'm telling you, long term, banks are dead. I mean, they can only survive through bailouts and monetary and continuous non-stop monetary easing. There is no other way they can survive. No other way whatsoever. So, looking in the long term, there will definitely be good times to be buying banks, and they will have some big rebounds. But looking at their business model in the long term, they're all done. I mean, if I had to buy and hold something, banks would be the last thing I would ever put in a portfolio. The absolutely very last one.
Okay. Point made. Now look at the XLF and you'll see why I think there's or look at the 10-year yield.
XLF looks like a dead cat bounce to me here, by the way. Yeah. Look at this.
But it's right. Yeah. But it's
what do you call this?
I think it's got more left in it.
Might be.
Yields haven't even turned yet. That's all I'm saying.
If we don't fail from here, then we're not going to have a pennant in hand. We're going to have
That's
a flag.
What we're going to have. Yeah.
Yeah, might be the case. I'm with you. Might be the case. Yeah.
Look at the 30-year yield.
But even since you are a guru in the RSI, what do you call this move in the RSI?
It diverged.
No, I mean initially, that diverged. But in essence, how do you call this whole move in the RSI?
Oh, you would call it bear market rally?
Yeah, I would call it working out oversold conditions, right?
Yeah. Okay.
I mean, we're already back to neutral. Looks like a good area to me to start turning lower. Here, a little bit higher. Doesn't make much of a difference.
All I know is I made the bear call based upon yields collapsing. Okay, and it overshot my expectations.
Oh, absolutely. You were on the right side of the market there.
Yeah, that's when 10-year was 198. Okay, and I thought they could go to 130. I was really aggressive. I didn't think 40.
And it went to 36 cents.
Yeah. So anyway, I think we're coming out of here in the 10-year, and that's going to help banks. And the 30-year looks like yields will rise at a faster rate. So I'm looking for some steepening. Therefore, the banks aren't done going up until.
By the way, the reason I said that the banking model is dead and banks have no way out is the following. There is a saying in Greece which is like bros gremos και πίσω ρέμο, which means in front of you have a cliff and behind of you have like the a stream. So the reason is the following. If yields keep moving lower, they can make no money from traditional banking. If yields start really normalizing, the companies that they've loaned will go bankrupt. So in essence, the loans that they have in their portfolio will go bad. So that's why I'm saying that there is no real way they can make money through the traditional methods that banking made money. Because normalization
I know why you don't like banks,
up.
Steve. Tell everyone the truth. It's because you're an advocate of blockchain, and it's to replace banking. Steve has he had an overnight nervous breakdown and took all his gold and sold it and bought Bitcoin.
Of course, absolutely.
Anyway, it's interview time anyway. So, Chris Capri at Second Skies Forex.
Yeah, I do.
Yeah, I'm looking forward to us today. Yeah.
Okay. Perfect. Okay, more questions. We have quite a few of them. We're going to cover, unfortunately, on Monday, right? Yeah. Monday. Okay. I'll tell you what. If something happens today, if let's say we have some type of explosion in volatility by tomorrow, we're going to have a webinar without the American part of the team. Okay. So, but only if something happens. So don't worry. I mean, if we really have like big market developments, I doubt it. We're going to have a webinar. Otherwise, we'll see you on Monday, and have a lovely 3-day relaxation. Thanks, Coach.
You're welcome, Steve. Have a happy Easter. Chris, I'm going to get you set up now, buddy. Okay. There you are. Welcome back to Face on our 3rd anniversary week, Chris.
Hi, can you hear me? Sound
Yeah.
check.
Yeah, got you, buddy. Welcome back to Face on our 3rd anniversary week.
Good to be back. Do we do video for this or just audio
Yeah,
only?
so you hover your mouse.
Yeah, I got
Under
Zoom,
share.
so
Share. Yeah, you
Yep.
can share your screen now.
cool. And then give me a
There
second.
we go.
I get the Q&A portals up.
So it's been a long time.
How are things on your end?
Good. It's we're Forex Analytics is an overnight success in 3 years. How are you? How are you doing,
I
buddy?
cannot start video because the host has stopped it. So
Oh, you want your mug on it? You could show you.
it doesn't matter. It's up to you if you want to do it.
It's okay.
Not too great.
It's fine the way it is. So,
Cool.
what's on your mind? People that don't know you, Chris, you have a lot of credibility and authority as not only a trader, but as a teacher, as an analyst, and you're always on the cutting edge, looking for a new edge. And, I see some of your students tweet in my stream, and congratulations on, creating a legacy of teaching people how to not get run over in this market. Welcome
Well,
back.
there's it's really interesting because I've been expanding a lot over the years in terms of what we're teaching. And there's a lot of things you see on YouTube, of like these young YouTubers who were like former real estate people, or one of them's like a magician, and now they're getting paid tens of thousands of dollars for giving stock trading advice. And then when you see their stock trading advice in their videos, you're like, oh my God, you would be personally horrified. Some of the things that you see people out there. And so, it's just, it seems like the training industry and the trading education industry has just kind of gotten flooded as of late, and very few people with institutional experience like yourself or myself, people who had worked for, banks or CMEs or floors or whatever, or hedge funds. And, it's
Well,
just,
I don't know about you, Chris, but I've never traded a pandemic before. And these guys don't even remember 2008,
yeah,
let alone 2000 or 87, or that markets can move in 2 directions, and people are learning that you're not a genius because you bought a spider and rode it through a bull market, right? You like that one? Huh?
Yeah, I mean, I've traded through 2000. You trade through 87. You trade through
1929.
Yeah,
I was on the floor with Jesse Livermore. So I've seen.
You were 10 years old back then.
They let me on the floor. I was in kindergarten, but I was paper trading, and they let me on.
You and Jesse were writing the quotes on the chalkboard at the.
I'm the reason. I'm the reason why Jesse committed suicide. I was an illegitimate.
I do remember him mentioning a Dale from Chicago in his books and his memoirs. So I didn't know. It's good to know that was you.
Operations of a commodity operator. So, what are you doing here to stand out? I think the best thing you can do to stand out right now, Chris, is be honest about risk and be ethical, and then you're not promising blue sky because it rains.
Yeah, I had and that's an interesting thing, because I've had a lot of students email me that they're just crushing it right now. And I have one student, he made about $190,000 in the last month, so he's had a really good month. But then when I looked at his equity curve, I noticed that it was one of those equity curves where you see like small gains and then you see this really big jump.
Yeah.
And how do you get those? You get those from risking too much.
Right.
And you know, he's much more of a gambler style that's more addicted to risk. Like he's someone who's used to dealing with like selling and buying of high-end cars and things like that. So for him, there's a certain rush that goes with it. And you know, he sent me his report
Interesting.
saying he made, you know, a few $100,000. He did great, and I'm happy for him. But I also said, look, you know, when people trade this aggressively with risk, it actually affects your brain and your hormones. And so you need, human beings need testosterone to take on risk. If you have no testosterone, you can't take on risk. That's why men are much more aggressive with their risk trading and taking risk when it comes to trading than female traders, because they have more testosterone.
You know, Chris, that I'm 66 now. And
So you're
because
just because
I've low T, I'm so grateful that the CME came up with a micro S&P contract for me.
Right.
It's for
you and Arnold, they got
it's
about
for
the same
traders.
right now.
Traders with low T can trade micros.
Well, if you look at think about all the big losses, you know, think about the fail, and let's think about like Boaz Weinstein and his, you know, mess up many years ago and things like that. All of them were on big winning streaks. And when you go on big winning streaks, your testosterone increases. It just continues to increase. You get addicted to the wins even more. But then a problem is that when the testosterone gets too high, then the risk becomes blind. You're becoming overly aggressive, and it's more of like you're trying to go for a cocaine fix than you actually are trying to make an intelligent trade. And so you're right. There was a lot of geniuses in the bull market, you know, of 2009, 2010 onwards. There are people that have never seen the 2008 crisis. So they've never even seen a bear market before. And just like Bitcoin, when it was like climbing up in 2017, and then, you know, through December that year, there were all these genius traders in coffee shops. I used to go into coffee shops and I was like, what the heck? Where did all these traders come from? I would see all these laptops open with charts, and I was like, wait a minute, I come to this coffee shop all the time. There's never this many traders. And then I sat down next to one of them, and he's like, are you a trader? And we talked, yeah, I trade this and this and this. And he was like, oh, he's like, I just trade Bitcoin. And I was like, oh, okay. And so, you know, I got to like get to know him. And, you know, during a bull market, anybody can be a genius. Now that we have a two-way market, you're seeing really who's made of what and who's experienced what and how do they manage risk and how they manage their emotions. And so,
you know, Chris, that's a great segue, because I used to raise money for CTAs. And, you know, most people, when they're raising money for CTAs, they want to look at performance, you know, what their best days. I always looked for what was their worst drawdown. Okay. And how did they handle and manage that drawdown? So you talk about testosterone when people are being aggressive during the drawdown period. What happens to traders hormonally? Do they start filling up males with estrogen and go fetal on the couch?
So what
does the opposite
They're
happen?
in the Me Too circle.
Because I've been fetal before. I was just wondering, you know, what's the hormone driving me to
there's
the
a
couch.
testosterone dump. What happens?
Oh,
there's a testosterone dump, and it's kind of like a massive hangover. And then and because they don't have the testosterone, they lose all confidence. And so they end up making worse mistakes. So they have a big loss. The big loss creates a testosterone dump. The testosterone dump makes it harder for them to actually take on risk. They become fearful because they're not operating at high levels of testosterone. People who've had winning streaks of, say, you know, 20 plus trades or something like that, or where they've seen, you know, every trader's had winning streaks. But new traders are always very vulnerable because during that winning streak, they're not really afraid. They're just kind of trading as is. They're really trading in a very kind of clear mental way. When they go on this winning streak and they build confidence, and the winning streak continues, they build more confidence, and the winning streak continues, and confidence. And then what do you hear from a lot of these new traders? They're like, some of them, if they're smart, they will say, I don't know, I feel like, you know, it's coming towards an end. That's them hitting the edge of their comfort zone, that they're not used to trading this well. And usually when that happens, there's a psychological mean reversion. And then what happens? They have one big loss that offsets almost all of their gains. And so you probably heard that story hundreds of times with beginners. They go on winning streaks, they do great, and then what happens? One loss. and all of a sudden they're just like
Happens
totally
at
shut down.
translates to everything, doesn't it? Athletes, any kind of performer, you're in a peak performance zone and then you slip out of it and sometimes you can't find your way back.
And that's the difference between people who have experience and people who don't. People have experience. So if you look at athletes in crunch time, there's always this idea that there's like this crunch time player that he's totally clutch. And in actuality, what's happening is in high stress moments, it's not that the best athletes are performing above their baseline. Their numbers actually dip a little bit. But the difference is that they're managing the stress of that very well. So their performance only dips just a very small amount. But the people who aren't managing it well, their performance dips massively. And that's where they look like they're clutch because they're not making the mistakes that everybody else is mistaking. So, I'm glad you said that when you were raising funds for CTAs, that you looked at their worst days. That was
Yeah.
what happened when I applied for a job at a hedge fund, which is that they wanted to look at every single trade I'd done over the last year. And I had one big loss after that. And they were super critical of it. And then they noticed that I had not only adjusted risk after that, but then I started to rebuild gains after that. And they felt like, okay, you managed a big loss pretty well. And that was kind of the final decision.
Well,
Which is
that's
that,
interesting. There was a guy when I was on the floor that owned a clearing firm where he had a lot of big local traders, and he let them trade themselves into deficit where they'd be, red ink. And he
Right.
always said it's the guys that could come back from that ended up with a career.
Yes.
So yeah, so really it's like that. You don't know what you have or whether it's faith. You don't know if you have it till you need it.
Yes. And I think that's where true confidence comes in. My girlfriend had asked me, I've been with her for now 8 or 9 years, and she had asked me many years ago when we started dating, she said, where does your confidence come from? And I said, well, what do you think? And she said, well, you've, achieved a fair amount of success, financial and personal and things like that. And I said, to be honest, that's not it. It's the fact that I failed many times, but was able to come back from that, like to
Yeah.
completely fail. 20 years ago, I was living out of my car. I was living out of a 2-seater car. It was a Miata, and like to have everything you own in a little 2-seater and, to come from that to this definitely builds confidence. But I made many failures and setbacks along the way. And it's the ability to get back up and recognize your mistakes and then correct them and to take it personal, but not personal. I made the mistake. I made those mistakes and to own them. But to not make it like, oh, I'm a bad person, I'll never learn how to trade. And, that kind of self-identification creates a really negative self-image and it imprints in a way that, you don't think you will be able to trade.
It's all in
So-
our heads, Chris. And I'd say the audience today probably isn't used to hearing an interview like this, where you're really talking about the psychology and all of what translates in our mouths. 90% of it is psychology. So I know that's something that you really take an interest in. You look at a trader and look at them holistically and help them with. If you can master your emotions in trading, does it translate in life for people?
The ability, anytime you build emotional intelligence, it generally translates to other aspects of your life. And in many aspects, I would like to, you mentioned a legacy. If I could leave a legacy, I think it would be that one of the things I'd like to do is to be able to make trading a part of mainstream college education. Because think about the benefits
Nice.
of becoming a trader. So when you even if you don't have to become like a professional trader or anything like that, just like a course in trading for a year, because what's one of the great things you learn about trading? Risk versus reward. And how many times have you
you learn about yourself?
you learn about yourself? So you learn about yourself on how you are with money and how you are with success and losses, on how you are with failures. Trading is not a linear learning curve. So when people who are good at other things come to trading and then they fail, their confidence is really tested. I have an engineer student. He's super bright guy. I mean, like high IQ dude and very successful at many things that he tried. When he comes to trading, and all of a sudden trading just kicks him in the butt. And so, he initially wasn't confident. I said, well, this is a real test of that confidence that you think you have. So you learn about yourself. And let's just take the basic things about trading: risk versus reward. How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus reward? How many times have you personally applied, risk versus an analysis of risk versus reward in other things that you do in your life that aren't trading, that you're like, I don't know, the upside on this doesn't seem that great, or the downside seems like it's too big for me to take that risk. That's a valuable lesson for college students to learn risk versus reward. So there's that, managing money, understanding how your investments are going to work over time. Wall Street doesn't want college students to become good traders, because if that's the case, then they're not going to pay for, a lot of these managed funds and passive investing so that all these passive funds can make all these fees. They don't want that. They want them to be the smart people so that you give them their money.
There's always a surge in the desire to become self-directed after a market takes a hit in 2000, 2008, and now again, where people are saying, if anyone's going to lose my money, it's going to be me.
Yes. Brilliant
And
insight. And
that's what's happening again.
And it's unfortunate that it takes a major loss for people to say, okay, I'm going to take this into my own hands, because why would you change something if everything's going well? Passive indexing, passive investing was great, from the latest bull run, but now a lot of people are actually legitimately starting to question that. We've had a massive shift from active to passive investing because we just had an uninterrupted bull run for years. Now people are starting to go, maybe that buy and hold strategy isn't such a great thing. Why my stock's down 50%? Is that such a good idea? So you've
4
seen
years
a lot of
of
investors
gains, 4 years of gains given up in 3 weeks before
in
the
3
recent
weeks.
recovery.
Well, how about the whole I bought it for the dividend theory?
Mm-hmm.
That's, I bought it for the dividends is great during bull markets, but if you're buying for dividends and you're buying and holding long term, you're trading for one full cycle. You're trading for a bull market and a bear market. And
How about go ahead, finish, Chris.
As we know, bear markets wipe out value faster than bull markets build them. So
yeah, how about I don't want to take profits here, even though I know things are overvalued, because I don't want to pay capital gain taxes.
So then they're gonna
wish they had capital gains.
50% haircut on their, look at there's a lot of people who are buying Delta. Delta was so stable for years. There was a lot of iron condor in plays in the option market because it was super stable. And people are like, oh, well, I love Delta at 50, so I might as well buy it at 40, which, okay, I don't understand that theory. It's the whole dividend theory is kind of been destroyed now, because you should love dividends, but you should love capital gains even more. How many people got rich off of dividends alone? No, you got rich if you got rich off your stock portfolio, you got rich off your capital gains, not on your dividends. Your dividends became a compounding income over time, but not something that has, over long term. You don't sit there and like, wow, I made millions of dollars from dividends. That just doesn't happen. So the dividend theory has kind of been blown out of the water now, because people have actually experienced a bear market. And now you get to see like, okay, buying and holding isn't an effective strategy. It's just not an effective strategy. You're basically saying, I'm only going to make money in one market cycle, and I'm just going to take it on the chin and the gut for the other market cycle. That doesn't make much sense.
Okay. So we're looking at Delta here, and you have that orange box, some type of line. I'm not sure, is that a moving average or?
Oh no, that's sorry, that's VWAP. It's an anchored VWAP. So when I do stocks, if I'm not doing intraday, then I go to anchored VWAP. So VWAP normally is just day trading, but anchored I found works really well. Delta's in trouble, obviously. You heard about Buffett selling millions of shares. Buffett, for him to sell shares, he must have been really spooked.
Yeah.
And if you look at Delta, what we said on February 28th, we wrote an article, is the stock market going to crash from the coronavirus? And one of our top recommendations was sell airlines. So back in this week, we said, Sarah, sell airlines. Every airline's been down massively. Delta's in trouble, I think. I think a lot of airlines in trouble. Delta's blowing through 60 million a day. So if they were to get the full 25 billion from Congress, how long is that going to last them? What, a month? That's not going to last that long if you're blowing through 60 billion a day. Like,
Chris, that was you just repeated the Bobby Axelrod trade.
Yeah. So
Bobby Axelrod?
I don't know Bobby Axelrod.
Oh, it's in that series Billions. And his big score was shorting airlines as the planes went into the towers. So yeah, this was a Bobby Axelrod trade, short the
Yeah.
airlines.
Well, one of my students crushed it on actually my chief course instructor, Sasha Gogolin. He crushed it. He sold Boeing around like 315 and
Yeah.
rode it all the way down. He's
Wow.
up like 38% on the year. So he's
Nice.
crushing it. He sold that was his big thing. He sold a lot of airlines. We recommended in our article, our big thing was sell airlines, sell entertainment, sell hotels, because nobody's going to fly with borders closed. That's obviously pressure on them. Nobody's traveling inside Europe. Nobody's traveling to Asia right now. So airlines are going to be under pressure. And do you really think people are just going to want to just start flying normal again when, you know?
Yeah, I
at the
wanted
end-
to ask you, I know you've given some thought to this. So
Yeah.
first of all, natural disaster, this coronavirus or something else?
Tricky. There's evidence on both sides that it was man-made out of Wuhan. You know, I'm not an expert in this
Okay.
field, so I've
All right.
limited, but
That's
yeah,
fine.
it's a
I don't know
pandemic.
I don't know is a good answer, because there are times I think I have an opinion and then
What do you think?
I'm at the I don't know. I
Yeah.
kind of think it was I don't know where it was made up. I just, made a poem and China rhymed with one of my lines, so I used it. But I don't think this was, I called the Bat Cave and asked Batman if the virus really jumped from a bat to a human being, and he denied it. And I kind of think it was from a bat to a test tube to the human race. So that's
You
my
think so? You
opinion.
think it was created in a lab?
Yeah, and I don't know where. And
Yeah.
it could have been an accident, and who knows, all of that stuff. But what I'm interested in is, a lot of people are hoping this is going to be over. And a lot of people I talk to says, there are waves that, we may not be through with this for 18 months, 2 years of on and off. It recedes, and then you can have another wave. Normally, with everything, you don't have just one wave, normally three.
No.
And in 1917, they actually did have three.
Yeah.
So what are your thoughts going forward? Is this a new normal for us now, Chris? This our world?
It's interesting that you mentioned the waves. I have a good friend who's an ER doctor, and they've done a lot of research on this, now that they're home right now, basically. And
Yeah.
So a lot of people are kind of looking let's just take the US. A lot of people are looking at New York as kind of like the lead, because they were, the hotspot of that. Go figure, population density. That's, that's New York. But the thing about it is that it's not like it got to the US uniformly. It came in pockets.
Right.
And so some of them got them early, and they're, coming towards the peak sometime this month. But then other areas are starting to build up. Washington was the first one that got hit, and where I think the first death was. But New York didn't even have any cases for weeks later. So New York may come down, but then you got Louisiana, and then you got Georgia, and then you got Florida, and then you got all these other things. So it's not like the US is a monolith in terms of infections. It's not like everybody got them all at the same time. Every state got
Yeah,
them.
it's not like Greece where they shut down, and Italy they shut down the whole country.
Correct.
Completely
and
different,
so we haven't even gone to an Italy style lockdown yet. So
do you think
I
we
think
are going there?
possibly if New York was to get way worse and way out of control, or a couple other hotspots turned into New York, possibly. But I also think you would see massive social unrest if we went to an Italy style lockdown. It's
Yeah, okay.
Americans aren't used to having their freedoms, taken away from them. And there's definitely a fair amount of fear against government, panic and stuff like that control.
Yeah.
So
Okay. So getting back to the markets and what you're seeing here, we've had a recovery in the indexes. The airlines haven't done much. Yeah, so we've had a nice little recovery.
I think this is I think the recovery is an illiquid one. I think it's a lot of short covering. I think we're going to see more legs lower. If this truly is the recovery, this would be the fastest bear market in history. We've never had a bear market shorter than 3-4 months.
Yeah.
So if and markets don't just V bottom. They find me a bear market that just V bottomed. I've looked through all of them. There isn't a market that V bottom. Bottoms took time. They took on the short end. If you were to go back all the way to 1987 or even 1956, where we had 10 different 20 plus, declines, 20+% declines, none of them V bottomed. They all had several waves up. Then they usually made another leg lower. They had long periods of bottoming that the shortest one was about 80 to 90 days. I can show you. I kept all this up here. So
Yeah.
look at this. These are all, let's go full screen, and this is back to 87. Okay, so that's 217 days bottom, with many 10, 15, 20% rallies.
Yeah.
This one here, 147 days. You go a little bit further. Okay, this is a short one here. You got
But you
8
still
weeks.
had a retest.
You still had a retest. You always have a retest. So a lot of people are like, hey, is it time to buy stocks? And I'm like, look, bottoms like this take time. And if you look at pandemics throughout history, it's different than a war. In a war, we can make machines to create economy and commerce. But in a pandemic, you can't. It's not like buildings or things were destroyed. What's been destroyed is economic wealth. So
Well, is all the power of the Fed being behind this make it different in any way? Because they were able to generate a 10, 11-year recovery from the last recession. Is it possible they can hold things together for another few years with it being, we'll do whatever it takes? I mean, $1 trillion here, $1 trillion there, pretty soon it's real money.
I think if they were to do an infrastructure bill, because then the money's going to pass to jobs and everyday workers. That's
right.
So I think that if there is an infrastructure bill that does make it, I think that's the best solution out of all this. All the other prior stuff is going to benefit big corporations who over the last 10 years were spending 75% of their earnings in buybacks.
Yeah, engineering.
Yes, exactly. So a lot of people are like, oh, it's cheap. And I'm like, yeah, cheap to what? To the all-time highs?
Yeah.
To 10 years of buybacks? That inflated prices. So to me, the markets aren't cheap.
Yeah.
To me, they got more to go. So I think an infrastructure bill is our best shot at that. I don't, otherwise you're throwing economic money at a health problem. And if you're going to do that, you have to give it to the everyday person. But even then, I feel like right now we're in phase 2, or we're starting phase 2 of the economic downturn. The March was
the car wreck.
Shock. Yeah. March was we just hit the iceberg.
Right.
But the ship hasn't sunk yet. There's still there was time between hitting the iceberg before then the ship sunk. And so now, we're starting to see second tier effects. How many businesses are meant to have zero income for 2 months? Like if April's a wash and they can't open till end of April, how many businesses can go no income for 60 days?
Yeah.
How many?
Especially if you're counting on government to run smoothly and get money in their hands.
Oh,
Do you think that'll ameliorate it, or is that just placebo?
I think it's a little placebo. If you look at the kind of the bailout has already had problems because the banks are implementing their own individual criteria.
Yeah,
which seems kind of weird. So that I think that's causing problems in and of itself. So I think now is the phase that you're going to start seeing second tier effects. There are some businesses that are going to be closing permanently by the end of April. They just don't have enough cash. I have a friend whose business within 4 years made it to the Inc. 5000. He employed a high growth strategy, which means that you don't keep a lot of capital in savings.
You're leveraged.
You're leveraged to the hilt. And now, he was like, dude, he's like, I had to lay off 20 people. He's like, I am struggling just to come up with 2.5 million because he's spending 150K every 2 weeks in payroll. So, where's he going to get that? It's just not available right now. So I think now at the end of April, you're going to really see the tide go out a little bit and see who's swimming naked. And that's where so to me, the plays right now is
you trade pretty naked, Chris. Look at your charts.
How did you know?
And you know
is
what?
My webcam on?
No, but I was going to recommend you keep the shades drawn. All right, you don't want to get thrown out of the neighborhood.
I did a webinar once in my towel. My friends didn't know it at FX Street, but I did a webinar once in my towel. I realized the change, and then I was kind of in a bad spot, and I was like,
I did it in my pajamas for years. That's nothing. Anyway, you know what, Chris? I could talk to you for hours about so many things that where you have to.
Should we talk trade ideas real quick?
Yeah, let's go through a couple of potentially actionable things here.
Okay, so I think if you want to trade the short side, I think one of the best opportunities right now is in commercial real estate, because a lot of commercial real estate landlords are not getting rents.
Yeah.
So, I think it was something like 75% of all commercial real estate landlords did not get rents this last month.
So is it a REIT you short, or what is it?
Actually, yeah, I'm looking at UK real estate, UK commercial real estate. UK commercial real estate was having kind of a big upswing. So if you look at, here, let's go. So like land, there's just tons of them, but a lot of them were doing okay. And then look at how much they're getting hammered.
Wow. Yeah.
Some of them are starting to recover, but if you
Yeah.
look at it, I think there was a lot of real estate values that were just kind of doing this.
Yeah.
Or, and so
Yeah.
a lot of them are going to suffer. And UK is still, they're still early New York, like a couple weeks ago in terms of their infections right now. I mean, the prime minister is
Right.
in trouble. So,
Right.
do you think anybody's going to be, really excited about commercial real estate right now? I don't think so. I think if you want to short, you can short these right now. Airlines are still under pressure, and I think we might lose some airlines. That's for sure.
How about the dislocation in the bond markets, Chris? I mean, TLT, the bonds, the yields they went to during the initial phase of the crash, but then I saw TLT go from 180 to 140 in a week
Yes.
when the bond markets froze, and LQD commercial paper, that the Fed had to get permission to come into the commercial paper market. Isn't what we're talking about here, and that's why you're looking at commercial real estate, is we're really in a credit crisis now.
Yes.
So
Well,
and the bond markets are so huge, wouldn't there be lots of shorting opportunities in debt?
I'd agree. I think liquidity is actually really bad as a whole right now. How many times has the S&P had a market on close 20, 30, 40 tick jump? Does that sound like good liquidity to you?
No, look at how gold is trading. I've pulled up
Yeah.
gold candles. I go, this is dysfunctional.
Yeah,
They're taking away markets from us. They're raising margin. I hope they keep the casino open, bro.
Well, here's the answer to your question. If somebody thinks the market's recovering, usually there's broad-based buying. Like there's
True.
across a lot of asset classes. And there's usually not really bad liquidity in multiple, asset classes right now. We're seeing in the bond market, we are seeing it even in the options market. I've been looking at the options market heavily lately, and I'm like, wow, the liquidity is kind of thin in the options market right now.
You have to make an appointment to trade TLT.
Yeah, exactly. So, and even like, let's say EMFX, that was one of the other trade recommendations that we had, was go short EMFX, basically.
Yeah.
The South African rand, the Mexican peso, the ruble, and things like that. So that, the liquidity and the spreads on some of those things were just blowing out. I mean, like some of the spreads were just ridiculous. And so I'm like, okay, liquidity's not here. This is definitely not a recovery, So like when you look at ES, to me, it feels like we're kind of in a dead cat bounce, and you can see volumes just declining. So
yeah,
you have these 20, 30, 40 point ticks on market on close. That's not high liquidity. So I think this is a combination of shorts covering and low liquidity, and some people really, really wanting the bull market to resume. But I think that's going to fail in the near future. And I think we're going to see another leg lower, and I think we're going to see new lows.
Okay, you have a number or area in mind that you're thinking?
In terms of where it stops, I think it's going to stop just short of 3,000. I don't think we'll make it to 3,000. I think
no, I mean to the downside when it rolls over.
I think 16 to 1,700. Somewhere around this base. Maybe
that old top that was like and there was something even at 1,550.
Yes.
Going further back, that was I think the high of 08 and 2000.
Yes.
Yeah. Okay.
I could see the 1,550 all the way up to 1,900 being the base, or being the bottom of it there. So
okay,
I think that's what we're looking. I think there's going to be some trades of our lifetimes in EMFX when they do finally calm down. Because if you look at, when was the last time carry trade was viable?
Yeah.
From our FX experience, the last time carry trades was viable was 03, 04, 05, 06. Right. And then after that, rates just started going down, 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 down. So G10 FX, there's no carry trades. But in EMFX, I think you're going to see some carry trades of your lifetime, as some of these start to mean revert.
That's what Steve Volge has been talking about. There's going to be like home run balls in some of these.
Huge.
And you need a turn in the dollar for this to happen.
You need to turn the dollar, or you can play euro if you wanted to. You can go Eurozar, you can go Euro Max, Euro Ruble.
Oh, okay. Interesting.
That would be, I mean, because euro super low interest rate, so you actually, you can benefit a little bit more from that. I like EMFX against euro, and then dollar for sure, but I would like it better against euro because Europe is really getting hit right now, and there's a lot of weakness in Europe right now. So that's
what a great recap and interview, man. So I mean, we talked about everything today, Chris.
What didn't we talk about?
Why your website and how people could follow you and get in touch with you and work with you.
SecondSkiesForex.com. We are, you can find all our free material here. We've had over thousands of articles. We're moving more onto YouTube though. So we're going to start, pretty much putting all of our material into YouTube so they can check out our YouTube channel as well. But SecondSkiesForex.com. We do webinars for our members every single week. And, we have several courses, stocks, commodities, FX, everything across the board. But our goal is to change the way people think, trade, and perform. It says right here, change the way you think, change the way you trade, change the way you perform. And we combine my 20 years of studying neuroscience at the university. That was my focus, was human learning and memory. And then also my experience in psychology and, meditating for 20 years. I've learned a lot about the mind that kind of gives me a unique perspective, I think. So I take that and I combine it with my approach to understanding the markets, which I trade price action, like you, I trade price action and I trade order flow, and that's how I trade the markets. So.
Okay. Corona, fear that I'll own you. Born in a lab in China. You saw that one, didn't you?
I did.
You? All right. Yep. Anyway, so Chris, it's always great having a conversation with you. And
you as well. You stay healthy, and always good to be back. And then let's do it again on another anniversary.
Okay, let's do it before that. And
that'd be great.
Everyone, that's Chris Capri. You can follow him at Second Skies Forex, and that's also his website address. Great seeing you again, talking with you, my trading warrior brother. Good hunting, and may all your loved ones remain untouched.
And you as well. Be safe, my friend.
Okay, buddy. All right, everyone, that's a wrap. And that's a wrap for the week. Since we're most likely, I won't be broadcasting tomorrow. I want to thank everyone for hanging out with us this week. And please stay home. We all have great futures ahead of us. So be patient, just like you have to be patient with the market. Let trades come to you. Let's just get through this and protect yourself, just like you protect yourself in the market. Protect yourself from this virus. And we'll see everyone on Monday. Have a great weekend. That's going to be a wrap. Same to you. All right. And most of all, don't just count your pips, count your blessings. Thanks again, Chris. See everyone.